All right. Well, I'd like to welcome Andrew Riesen to the Private Practice Elevation Podcast. Andrew, thanks so much for joining me today.
Thank you, Daniel. I'm very grateful to be here and grateful to have the opportunity.
Awesome. Well, I'm excited about our topic today because, as I mentioned before I hit record, we haven't spent a lot of time on accounting, bookkeeping, tax stuff. All those sexy things that that people kind of push off a little bit when you start a business. So I'm excited to dig into this. And so why don't you kind of just start us off by just letting us know a little bit more about yourself and what you do.
Yeah, well, first of all, I commend you for, escaping accounting for this this long of an enduring period. And I'm grateful that I get to be the one to break the ice on the topic. A little bit about myself. I started my career in wealth management. I worked for a financial planner in Portland, Oregon, and they worked with a lot of independent physicians. And so that was a really fun experience. I don't think that's a world that I would like to live in. But then I had the opportunity to work with a big public accounting firm called PricewaterhouseCoopers. I worked in the audit practice, which meant we worked with small to medium sized businesses and startups that were growing to help them make sure that everything was in order. Then I had the opportunity to help them build their own kind of internal software incubator. And this was my promise to get out of accounting. And I was going to go build awesome software startups. And then they're like, cool, we're going to build accounting software startups for small to medium sized businesses. And I was like, great, we're back in it. So I had the opportunity to build a sales tax software product, which is a terrifying, I'd imagine, given that you're in the world of website development and, have worked with folks that have dealt with sales tax issues historically. And that is a nightmare of a problem to solve. And then on a personal level, have dealt with anxiety, depression. I had an acute suicidal moment in my youth, and non-ironically, the woman that I met when I was 16 and am now married to ended up becoming a clinical psychologist. And so I have a deep passion for mental health. And so there was a point in time in my journey at PwC where, my goal is to really go out and do something on my own at the intersection of my passion for product development and also mental health, and started by building a marketplace at the intersection of access to care, and realized really quickly there's a lot of really scary parts of being a small business owner and a therapist that are very underserved. And there was a big opportunity to take the skill sets of both Victoria, my co-founder, and myself, and apply them in a really meaningful way to support clinicians in their practice as they're getting going, and similar to the work that you do as they're scaling up their practice and elevating their practice as well.
Yeah, I love that. I love hearing about just the intersection of just all the things, of your life to just kind of put you exactly where you need to be and kind of where your strengths kind of really help impact the world and this community. So I know that accounting is one of those things that I know for myself as a business owner, kind of you don't think about when you're trying to start a business. You just think I'm going to help people. It's mostly about that. Yes, it's also about money, and making a living, but making a living doing something that you love. So, like when we're starting out these businesses, or maybe somebody who's listening and they're maybe like year one. I want to kind of start with what are some of like the mistakes that people make, or what are some of the things that people forget to think about when they're starting out when it comes to bookkeeping, accounting, that whole world.
Yeah, for sure. Well, congratulations to whomever might be listening that's broken out on their own and it's getting started in private practice. That's really awesome. The independence, autonomy, and I think flexibility of private practice, as well as the earning potential, is much higher, and you're better suited to serve the clients that you were trained to serve, which is exciting. As it relates to the business stuff, and for probably many people listening, the stuff that you've been putting on the back burner and not wanting to think about, there are kind of a few key things that I'll talk about as I think about the basics of what sets up a good foundation for you as a small business owner, as it relates to kind of accounting and compliance. So the first thing that I would say is when you're going out on your own, the first thing that you want to do is find a separation of church and state. So a separation between your business self and your personal self. And so
Mm.
whether you're set up as a sole proprietor or you've made the decision that you want to set up a formal business entity where that separation is truly pertinent and important to protect your business assets from your personal assets, more than anything, having that separation is going to enable you to have a more clear picture of where your business is at any point in the year. So even if you're a sole proprietor that, you've decided that you want to work with Daniel, get your website set up, you have 10 clients that you're seeing on a weekly basis while you have a, full-time W-2 job, set up a separate, personal checking account and a separate personal savings account. That checking account, that'll be the great place for all of that money from simple practice to flow into all of the expenses that you're paying for malpractice insurance, working with Daniel, any sort of software that you're paying for, all that good stuff, have it flow out of one place. And then on a monthly basis or a biweekly, whatever is the best cadence for you, make sure that you're setting aside money for taxes. And that would probably be my next recommendation is set aside money for taxes. As a self-employed individual, one of the scariest freaking things that you can experience is getting to the end of the year and recognizing that, like, holy smokes, I should have been setting aside 10% or 15% more than I have been. And I have a
Right.
really scary liability. And I think when you set up that infrastructure to separate business and personal, not only are you going to have that foresight and understanding of, how much am I making, how much am I spending, but you're also going to start being proactive in setting aside money for success. And then I think the last piece is, and I think there's a spectrum around this, is like understand what those cash inflows and outflows are. And I'll describe this as a bookkeeping system, but for somebody that, this example of 5 clients or 10 clients, maybe the best bookkeeping system as you're getting going is a Google Sheets where you're tracking your
Mm.
income, tracking your expenses. Every month you're looking at it and saying, oh crap, this month I spent just a little bit more on office expenses that I would have liked, or I spent more on advertising, or, I talked to Daniel and I should have just gone with him because then I spent a bunch of money on other advertising and marketing stuff. And, that's a great starting point. And I think the place that you want to get to is with that separation of church and state, with those systems in place, setting yourself up with accounting software to where you're going to be able to all the time see those transactions flowing through into one centralized place. And I think the last piece of advice I would say is just as it relates to kind of deductions and tax write-offs, which is a synonymous word for things that are reducing your overall income, taxable income. Um, if it looks like a business expense, if it smells like one and it feels like one, put it through that business account, put it in your accounting software, let an accountant like myself or somebody on our team or whoever you might decide to work with, your local CPA, tell you that it's not a business expense. You don't want to get to the end of the year and be like sifting through all of your drawers trying to find those receipts that you haven't thought about. Take advantage of all the write-offs that you can and have a professional help you determine what is or isn't one.
Yeah. Absolutely. I love what you said about saving for taxes. That was something that I learned that pretty quickly, myself and my wife in her private practice. Yeah, as I mentioned before we started our conversation or hit record here, my mother-in-law is a CFO of a nonprofit, and she got started in her accounting career as, I think, an H&R Block employee, just doing taxes and stuff. So she knows enough about taxes, and she's learned a lot about taxes for small business because she does our taxes, and I'm super thankful that she does that for free. But she's answering a lot of questions for us, and it's so helpful to like set aside that money. So like at the end of the year, basically, because we're a small business, we don't there's been years where we haven't gotten a return. Like for the longest time we haven't gotten a return, but we luckily didn't have to pay a bunch. We're starting to we've kind of come over this new I guess edge or new elevation now where we are seeing some returns from our businesses, which is super exciting. And also at the end of the year, because we've got kind of a joint, the way we do it, we have a joint account where both of our businesses, every quarter we put it in there and we file jointly. And so at the end of the year, yeah, we might pay a bunch on our taxes, but sometimes we give ourselves a return because that money
Yep.
is just sitting there, and so we're like, oh, we're great, we made it to the end of the year. Sometimes we get a return, plus there's even some money just in that account, so we'll kind of split that back into our businesses, use it for business savings, stuff like that. But man, the peace of mind of just saving for taxes, even though, every month, especially in those early times when you're like every penny counts, it's hard to kind of let that go. But the way we do it, we just set a percentage, and every dollar that flows in, a percentage of that dollar goes into that account and that fund. And it's so much peace of mind. And I don't even really, it's not really my money. I guess it's the government's, which is, oh, well, but, but it's just, I don't even consider it mine. It just goes into that fund. And at the end of the year, it's so helpful.
Yeah, my perspective on that is, I mean, if we're being honest, the IRS guidance and codification, the nerdy word for like all of the writing about like what is taxable, what's not, it's very clear that if you're going to owe over, $1,000 from a tax liability standpoint at the end of the year, that you're going to be responsible for paying into taxes throughout the year on a quarterly basis. And to your point, being conservative, setting aside money, and having a little bit left over that you then get to treat yourself at the end of the year is certainly better than not having set aside enough
Yeah.
money.
Yeah.
Um, oh, go ahead.
No, I was going to say, and you recommend, I think you said 10 to 15%.
So, in terms of recommending a certain percentage, I'm always wary of recommending a percentage, and it'll be interesting to hear how you actually went about making that decision. But when you think about the amount to set aside, thing to take into consideration is like the whole financial picture, right? So, you and your partner both are self-employed and have these businesses that you're building, and that's a lot and challenging from a tax perspective. And it's awesome that you have that support. But when we're thinking about a private practice owner or a clinician, like oftentimes we'll have folks come into the platform and be like, hey, I saw in my Facebook group or my listserv or my membership like 30% or
Mm,
25%. And the big thing to take into consideration here is there's a full picture that you need to look at. It might not just be you, or if it is just you might also have a W 2, you might have rental income, you might have
mm,
trust income. And so you need to take into consideration all of the variables that might have an impact on that overall effective tax rate, which is that tax rate against your individual taxable income, of which you'll be responsible for paying taxes against at the end of the year. So I would, either
yeah.
leverage a calculator online or have a convo with a professional, especially if you're just getting going. And especially if you're just getting going, acknowledge that that number is probably going to change quite a bit over time.
Yeah. And that's kind of what we've experienced, like starting out. I think my wife and I are very conservative. So I think we
Yeah.
started out with, a higher percentage. And then over time, we realized that maybe we were saving too much from our businesses. We kind of adjusted it. We do a little bit of, probably more so myself than my wife, a little bit of the profit first sort of way of doing things, of just doing those percentages, but then each quarter kind of looking at what we're saving for taxes. Like, is it too much? Is it not enough? And we make those adjustments over time.
Yeah, the profit first is a good model and a very common model that a lot of therapists use. But to your point, that's a great description. Is like it's a back and forth game of
Yeah.
figuring out what makes sense for you and your family over time, or you and yourself over time.
Yeah, absolutely. But what kind of questions do people maybe forget to
Mm.
ask or think about when it comes to accounting and bookkeeping?
Yeah, that's a great question. So, what types of questions do people typically forget about asking when they come to us? I think a big one is just the the number of deductions and the different types of write-offs that you can take advantage of. I think a lot of folks just broadly aren't tracking their income and expenses, or a lot of folks will just be looking at simple practice when they come to us and say, hey, here's what my receivables look
Yeah.
like, this is how my practice is doing, but probably haven't thought about the expense side. And so what might be helpful is some typical expenses that people can and should take advantage of. And um, professional development, very very common for clinicians, whether they are investing in developing a clinical skill set or investing in coaching for themselves as a private practice owner, maybe taking a course with you if you're running courses on that. Memberships, all clinicians are a part of so many different communities, whether it's your local or regional clinical association, all the way down to like a modality specific association. All of the software certainly that you're paying for, but clinicians are often traveling and going to conferences. And so the travel to the airport, the travel in your car, the hotel, the meals, the expenses, everything associated with that sort of travel is something that you should take advantage of. Home office deduction is oftentimes a big one that people don't think
Mhm.
about or take advantage of. most, if not everybody listening to this podcast, are operating in some form of a telehealth fashion. And so when you're operating in a telehealth setting, one of the big advantages that you have is that you can take advantage of the home office deduction. Two different approaches that you can take there. You can figure out which one is right for you. But even if you are also renting a physical space on top of that, you'll be able to take advantage of both of those as a write off. Another thing that I think therapists aren't often thinking about, and I think it's often just because there's so many different freaking variables that you have to think about when you're coming in to be a clinician and also a small business owner, is like, how do I plan for health insurance? How do I plan for retirement? And how do I set myself up for success? And specifically around the retirement piece, I think there's a bit of an all or nothing mindset of like, I have to do this all at once and like I have to contribute a certain amount. Like my
Hmm.
recommendation around that, there's a couple different, types of retirement accounts you can take advantage of, whether it's a SEP IRA or a traditional IRA or a solo 401k. Depending on the type of business, there may be one that's more right for you, but start contributing a very, very small amount. And
Yeah.
even if it's 1% of your overall profit on a monthly basis, that's better than nothing. And in most cases, sans a Roth IRA, you're going to have a tax benefit to contributing to your financial future that will have a reductionary impact on your overall tax liability. And I think the last piece that people often don't think about moving into private practice, because our brains think in threes, is PTO and setting aside money and planning for time off. A lot of the folks on our platform, whether it's paternity leave or maternity leave or shared time off, or a vacation, a lot of folks will feel incredibly guilty about taking
Hmm.
time off and just want to work throughout the entire year because they haven't appropriately set aside money. And so in the same way that you're setting aside money for taxes or planning for retirement, even if it's
Yeah.
3% month over month, set aside some money for vacation. You need to take time off. If you don't, it's going to lead to burnout. This is something that we know and see across all of healthcare, and the industry as a whole. And so time off, retirement, and taking advantage of all of the deductions. I would say those are a big three, that we spend a lot of time talking about.
Yeah. Oh, that's so good. There's so much to unpack there. I
Yeah.
wanted to I wanted to kind of go back to like what you said about those deductions. Like I mentioned about my mother-in-law and helping us, and she's been learning so much as I'm like,
Yep.
what, 7 or 8 years into my business. So like she's learned a lot of those things that you mentioned. And so it was always so funny or intriguing to me, like the things you can write off. Like she was asking us all these questions when she first started out, like, what percentage of your home office do you use for business? And like, what
Yeah.
percentage of your internet bill do you use for business? Like there's those little things that you could really get down into, like real nitty gritty, to really maximize, what you can take as deductions, which is super cool. And to me, it's like I've got this sort of, I love puzzles and like figuring things out. So it's like, oh, what else can we do? What else can we deduct? And it's amazing what you can miss, but also just what you can deduct. And I love what you mentioned about investing. I'm the geeky guy who likes to spend time with compounding interest calculators and
Yep.
seeing like, okay, if I just invest $25 into my IRA, in 10 years it'll be this. Like, well, what if I did $50? And it's amazing. And like really what I've learned is like really the biggest impact of your retirement fund is time. You can't get back time. You could always invest more money down the road, but you can't get back that time. So yeah, total agreement there. Like just start investing when you can, what you can, even if it's a super small percentage.
Yeah.
So
100%. Oh, go ahead. Sorry.
no, you go.
No, I was just going to ask because I was curious around some of those learnings that you've had working with, your CFO family member around, tax deductions and how that's kind of evolved for you, or what are some of the nuances or things that you didn't necessarily see at the beginning, or things that you kind of found across that journey.
Yeah, I think because I work solely from home, so that
Yeah.
was, for me, that was just a learning experience. Like I didn't realize so much could be written off. Like my home office, this room, like outside of work time, I'm probably in my home office maybe 30 minutes, so it's really almost
Yeah.
like 100%. This home office is pretty much devoted to that. My wife, she's mostly in person with her therapy practice. She doesn't do a lot of online stuff, but mostly she goes to the office anyway. So like she's really not using it. It's really my business. So there's nuances between the two of us because she's got physical space. She's traveling. So we have figured out what's the distance to her office, and there's a certain percentage or amount of like the miles that you can deduct. I forget exactly how it all works, but I think another thing we learned too was I believe it's healthcare costs. So travel to and from your doctors, there's a percentage there that can be deducted. And so just these little things that actually make for a lot of homework come April or March when we're like collecting all the information. And so like every year we've got this tax checklist spreadsheet, this Google
Yeah.
sheet that we share between my wife and I and my mother-in-law. And there's always more questions that she has every year. And every year I'm like, I thought we nailed this. I thought we like answered everything. So she just keeps finding new little things, little questions, and stuff to write off. But we go to we drop stuff off at Goodwill a lot. So we're like,
Yep.
we're adding those into there, because that's a nonprofit, stuff like that. Lots of little stuff. Well, you've kind of mentioned a little bit about, your platform and what we do. And I appreciate you coming on and not, you're not a hard salesman or anything like that, but I want to know, and I want the people to know a little bit more about Herd. So tell us a little bit more about Herd and the platform that you have helped build.
Yeah, this is the bane of Michael's existence and our marketing team's existence. Like whenever we do workshop, like I just like never talk about her. So I guess I can talk about her. Just talk about it. It's okay. You can talk about the things. No, the big thing for us, like, I mean, there's two things. Like, we want to solve the problems, and then we want to be focused on financial literacy and putting that education forth and whatnot as well. But Herd as a platform, so when we started out building Herd, one of the biggest things that we've learned is like QuickBooks and FreshBooks and the other solutions that are out there are not necessarily tailor made or tailor fit for clinicians in private practice, nor do they consolidate or solve all of the problems that are going to be really helpful to streamline really the challenges that are common across the board for clinicians. And so we've built really simple software where you can connect your business bank account to the platform or your personal account if you're a sole proprietor to the platform, track your income and expenses on a monthly basis. You get really awesome reporting and expense breakout. You get an understanding and guidance on a monthly basis of how much to set aside for taxes, how much you can contribute to retirement, and you can modify these fields to determine if there are other areas where you want to set aside money. We help folks transition to become an S Corp if that's something that financially is advantageous for you in your practice and you want to take on that administrative burden. And with that, have payroll we deliver through the platform and file taxes at the end of the year. And so you can think from the beginning of kind of your compliance year to the end of the compliance year from an accounting perspective, we handle that. And then we have relationships with LegalZoom to really make it easy to set up a new business, with Bluevine to set up a banking account, and with Guideline to set up a SEP IRA or a solo 401k. And it will help provide that guidance throughout the year and pathway for you to be able to accomplish some of those financial goals. And so for us, we're really focused on bringing things into one place, putting it at a dollar value that's cost effective, and I would say attributed to where you are in your private practice journey, because there's a lot of service professionals out there that I might describe as predatory in how they price for a very small solo practice. And so we're trying to right size that and connect you to professionals that can answer your questions throughout the year.
Awesome. That sounds awesome. And I've spent some time on the website, and I just want to say, like, kudos to you all and your team for just, first of all, making a great website. I mean, the website looks great, but really, like, for me, when I look at websites, it's always about how do I find information? And
Yeah.
it's just, I just say, go check out the website, joinherd.com, right?
Yep.
Go check that out. There's lots of resources there. Some of the questions that we're talking about here with Andrew are answered there. You've got just great resources there. One question I have about Herd, you mentioned that there's software, there's reporting, there's all that. Is there also like bookkeeping, like coaching, like one-on-one stuff like that you provide?
Yeah, so every person that joins Herd gets access to our team of professionals. So, like, on our team, we have bookkeepers, accountants, tax advisors, CPAs. We have CPAs that we work with that are really focused on tax prep at the end of the year. And so we have a plethora of professionals on the back end to where your questions come up and get asked throughout the year. We'll hop on live calls or we'll, answer them in an async manner, whatever is best suited for you. We know clinicians are business professionals, so we try to meet them
Yeah.
where they are.
Yeah. Awesome. Well, sounds great. And thanks so much, Andrew, for this conversation. Is there anything else that you want to mention before we hop off?
Uh, the only thing that I'd like to mention is that Daniel's services are tax deductible for you, so check out Private Practice Elevation.
Absolutely. Awesome. Well, thank you, Andrew. We'll put the links to Herd in the show notes for this episode. I really appreciate your time. It was great chatting.
Yeah, thanks so much, Daniel.